Hey, welcome back everyone. This is Uncle Frank and I am not a financial advisor, nor is any of the content to be construed as financial advice. This channel is for entertainment purposes only. Okay guys, let's prepare, let's get ready, let's put in the work, and let's call this calendar the countdown to a possible rate cut, because that's what it is. And everything that's on the calendar is amped up because of the pending Fed decision. Monday, December 1st, the 21 shares XRP ETF, symbol TOXR, is set to begin trading. It'll trade on the CBOE. This ETF is designed to track the CME XRP dollar reference rate, giving investors direct exposure to the spot price of XRP. It will hold physical XRP in secure custody with providers such as Anchorage and BitGo. The launch comes amid increasing institutional interest in XRP, with other ETFs having already recorded significant inflows. At 9:45 a.m. Eastern, S&P final U.S. manufacturing PMI, and then at 8 p.m., Fed Chair Jay Powell speaks. Now, this guy is dangerous right now. He's a lame duck. He's not going to be chair for much longer, in my opinion. You might be interested to know he's not an economist. He's a lawyer and an investment banker. I, for one, will be delighted to see him go. Tuesday, December 2nd, 10 a.m., Fed Vice Chair for Supervision Michelle Baumann will testify. Wednesday, December 3rd, 8:15 a.m., ADP employment. 9:45 a.m., S&P Final Services PMI this time. Thursday, December 4th, 8:30 a.m., initial jobless claims and U.S. trade deficit. Then at 12, Fed Vice Chair for Supervision Michelle Baumann will speak again. Friday, December 5th, 8:30 a.m. This is a big day. Personal income and spending, that's a delayed report, and the PCE index, another delayed report, and the Fed's favorite. Okay, at 10, we'll get consumer sentiment, which is manipulated garbage, and then at 3 p.m., consumer credit. Now, the little calendar on your screen on the bottom is the New York Stock Exchange trading calendar for December 2025. That red slash on Friday represents the S&P rebalance updates. They're released after the market closes. The 9th of December is shaded gray because we get another short interest update. Wednesday the 10th is orange because that's when we get the FOMC rate decision. Guys, check out the calendar from mortgageelements.com. That'll give you the major stuff you need to plan your month ahead. Thursday the 11th, PPI. On the 17th, retail sales. On the 19th, GDP and PCE again. Of course, the markets will close early on the 24th and 31st. That's for Christmas Eve and New Year's Eve. And the markets will be closed Thursday the 25th and Thursday the 1st for the holidays. Now, one special day I want to warn you about is Friday, December 19th. That's the one with the red and white X and it's highlighted yellow. That's the day they rebalance the S&P 400, 500, and 600. The third Friday of March, June, September, and December. And on that exact same day, that's the last triple witching day for the year. Heads up for that Friday and the following Monday when trading resumes. Okay, so where are we at on the rate cut? JP Morgan issues urgent call on December rate cuts. The bank had argued for weeks that the Fed Reserve would likely wait it out until January to ease policy. Yeah, they must have been short. However, it is now forecasting a quarter-point cut to be implemented on December 10th. They covered and went long. A major pivot that's likely to inject a fresh dose of optimism into the stock market. Okay, by now, if you still trust what JP Morgan says, you've got a screw loose in your head. A December U.S. Fed interest rate cut looks likely again. That's Morningstar. Traders have dramatically shifted their expectations for whether the U.S. Fed will lower rates in December. But as of November 30th, the odds for a 25 basis point cut by the Fed are high, with market probabilities ranging from 83.2% to over 87%. The likelihood of the Fed maintaining the current rate is around 13.6%. Okay, Uncle Frank's call is at 100% for a rate cut. The Fed, the White House, economic data providers have all been ignoring the tidal wave of tech layoffs, but I haven't. Here's one from Sunday morning for you. See the memo Verizon sent to 13,000 workers it just cut. Verizon's decision to cut 13,000 jobs lands with particular force because of how directly it affects people's daily sense of security at one of the country's most recognizable employers. The internal memo that went out to thousands of staff was not just a form letter. It was a blueprint for how the company wants to remake itself in the age of automation and artificial intelligence, and a signal of how brutally that shift can play out for workers. We will not be allowed to ignore or spin this bullshit for much longer. Just my opinion, it's a full-blown crisis. I would add, Amazon may replace 600,000 warehouse jobs with robots, Buffett unfazed. Well, let's hope the robots buy Chinese shit through Amazon, because I won't be. Guys, take your pick. There are geopolitical risks everywhere, not just Ukraine and Gaza, but now Venezuela, Mexico, and we can't forget China. Today I learned the risk of war with China, highest ever, as U.S. pulls missiles from Japan. Maybe we made a deal with China. Let us bomb Iran for Israel, and we'll let you tune up Taiwan. I don't know. But the major geopolitical risks at the moment include ongoing military conflicts, escalating U.S.-China strategic competition, the rise of trade protectionism and economic sanctions, increased threats from cyber attacks and AI governance gaps, and growing political polarization and social unrest. As for me, I'm excited about another XRP spot ETF going live, and I hope it sets the street on fire. While I might not be happy about XRP's current price, I will remind you that Ripple, the company, and XRP, the token, are already a spectacular success. By any measure, it's easy to forget that even at the current price of $218, it's still up over 37,000% from its launch in August of 2013, 12 years and 3 months ago. Ripple itself has managed to secure the 23rd spot among the world's biggest private companies. What we need now is for the company to announce its IPO. This reduces its reliance on selling 1 billion tokens every month to pay its expenses and finance its acquisitions. The other thing we desperately need is for institutions to begin using the coin for what it's designed to do: cross-border payments and transfers. That's it. It's that simple. I'm sad to report that many of my theories on XRP's price have come true. The coin was trading comfortably at 3 with dozens of catalysts ahead. But my subscribers will remember when I said you can't give the bad actors this much time to prepare. I predicted they would knock it down and let it rally back up on the news. And so far, their containment program has worked. My biggest hope now is they will cover and go long. Now, this is not investment advice. I am not an investment advisor. I will never tell you to buy, sell, or hold any security or cryptocurrency. And I know some of you will not like to hear this, but if I decide to buy more XRP on dips, meaning new money investments, I will probably go with this: the Amplify XRP 3% monthly premium income ETF. Okay? And I'll tell you why. Using this product, I can get exposure to the spot price of XRP and have a shot of earning 36% for 2026 while I'm doing so. I also won't be tempted to sell any coins out of my bag if it does go up, right? You can potentially earn a targeted annualized option premium of 36% by investing in the Amplify XRP 3% monthly premium income ETF, symbol XRPM. But this is a target and not a guaranteed return. On topic, 200,000 XRP payments. Fundamental 30% network spike spotted on XRP Ledger. XRP's on-chain activity is certainly there, which is a great sign when we consider the fact that funding rates are turning toward bulls. One of the most intriguing on-chain moves of the last few weeks was recently reported by XRP Scan, an abrupt 30% increase in daily payments, which pushed the network to more than 1,050,000 transactions in a single day. This raises the question of who is moving this much value and why, as it represents an increase of about 200,000 payments over the previous day. First, it's important to recognize that this spike did not occur during a significant price breakout. On the daily chart, XRP is still stuck inside a clear descending channel, with lower highs and lower lows defining the trend. The price fluctuated between 219 and 222, signaling hesitancy rather than conviction. The moving averages, particularly the 50, 100, and 200-day, continue to slope downward, confirming the broader bearish structure, and volume remains muted. What does a sudden increase in payments mean when the price does not react? Large spikes in the number of payments on the XRP ledger have historically been driven by two kinds of activity: automated or institutional systems rebalancing liquidity routes, and bursts of retail-level activity tied to payment rails or bot systems testing throughput. From a market perspective, this matters because it shows that XRP's underlying network continues to see real usage despite the price's lack of direction. However, on its own, it does not signal a reversal until XRP can reclaim at least 233 and then break the downward trend line around 245, 250. The chart remains structurally bearish. And here's why I had to come out and do a video on Sunday morning. Over 40,000 weird XRP transactions appear out of nowhere. What's going on? As revealed by prominent XRP ecosystem contributor VET, XRP Ledger recently saw a type of background activity that does not match normal traffic because the spike in account set transactions is too big and too organized to come from random users. These prints suddenly jumped into the 20 to 40,000 range and stayed there, which is the kind of pattern you see when someone is preparing a large batch of wallets, running configuration steps, and testing permissions before plugging in real liquidity. Amid the recent incident, many brought up how the last major operator known for bulk account actions, BitGo, already had its own anomaly months ago, but that event looked completely different. BitGo's situation was a script failure. Their automation kept trying to activate new XRP accounts, drain the reserve, and then got stuck in a loop, sending tiny payments that could not be funded. Now here's the actual post from VET. Someone is doing a lot of account set TXs on the XRP ledger recently, even after BitGo stopped. This new wave is the opposite, as it is controlled, deliberate, and far larger. Account set is used when someone sets up infrastructure. updating keys, switching flags, building wallet clusters, or preparing institutional environments. And analysts tracking XRPL activity, including VET, pointed out that ordinary users simply do not generate numbers like these. Now, guys, I'll admit this is not my area of expertise, but this may have something to do with BitGo being one of two custodians for the 21 shares ETF launch. The article closes this way: XRP is facing exchange shortage. At the same time, the exchange flows add another layer, with Binance showing over 68 million XRP leaving in 7 days and more than 35 million across the past month, while Upbit and BitThumb posted strong monthly inflows. Nothing here directly reveals who is behind the account set surge, but it shows that balances are being rearranged across several top venues at the exact moment when the ledger is recording its heaviest configuration load of the year. If you guys think I won't criticize the president because I'm a conservative, you're dead wrong. Donald Trump granted clemency to private equity executive David Gentile, who had just begun a 7-year prison sentence for what prosecutors described as a $1.6 billion fraud scheme, reported the New York Times. The founder and former CEO of GPB Capital, 59-year-old Gentile, was convicted and sentenced in May to 7 years in prison for his role in defrauding thousands of individual investors. He reported to prison on November 14th. According to the FBI website, Gentile was released on Wednesday, the 26th of this month. So all I see here is retail is not allowed to cheat. And when Wall Street cheats and robs investors, there are no real consequences. Check. Hashtag ETH, Ethereum's biggest week yet. Tokenization milestones, network scaling, institutional moves, and global adoption intensify. I don't have much respect for Vitalik Buterin, but Ethereum is experiencing one of its most active weeks of development across institutional finance, network upgrades, and global participation. Amundi has tokenized a money market fund on Ethereum as the network lifts its gas limit to 60 million and prepares for the Fusaka upgrade. Ethereum markets remain cautious, yet corporate accumulation, sovereign staking, and micro shifts indicate rising long-term confidence. So how did I play it? I got long the Roundhill Ethereum covered call strategy ETF at 17 flat, symbol YETH. It pays a weekly dividend and gives me exposure to ETH ahead of all these positive developments. It closed at $17.79 on Friday, up 2.42%, but is still down 22.65% for the month. You see, guys, more and more, when the markets are at or near all-time highs or getting frothy, it's tough to trade for stock pickers like me. So I move to vehicles that will pay me while I wait for direction, not investment advice or advisor. This pays a dividend every week and lets me play the big upcoming events for Ethereum. Hashtag Archer Aviation. There's the daily on your screen. You guys know I'm a big fan. There's been lots of troubling news on the company here and there, but my target remains 30 plus, by or before the LA Olympics in 2028. Not investment advice or advisor. I think the company has a huge future, and when you see EV tolls flying everywhere you go in 5 years, I hope you think of me because I told you so. How did I play it? When it dipped under 8, I bought some common. When it dipped under 7, I bought more common. I'm looking for a bottom, and I bought the 750 calls expiring on January 2nd. When my favorite stocks are breaking support, I don't get sad. I decide whether or not something serious is going on that will affect the long-term story of the company. I'm not seeing anything bad like that right now. So I'm waiting for FAA certification efforts to resume now that the shutdown is over, and I'm waiting for the company to deliver a piloted midnight to Abu Dhabi, which could trigger a payment to the company in the low tens of millions of dollars. Let me tell you why that's important. That would mean we're not pre-revenue anymore. And when money managers are searching for high potential growth stocks, Archer will now pop up where it hasn't popped up before. You see, some money managers will check the box, exclude pre-revenue companies when they're searching for new tickers, right? And now Archer will appear there for the first time, God willing. Okay, this is one of my speculative portfolios. We can do a quick review. I told you about the Archer calls. Keep an eye on CCCX. That's a SPAC that will become Inflection Quantum in 2026. That's a real quantum company with earnings and holds over 230 patents. I told you about my Ethereum play, YETH. CHAC is Crane Harbor. They recently merged with a Canadian quantum company called Xanadu, a leading photonic quantum company. I'm getting my ass kicked in GSIT. That's GSI Technologies. They've been in business for 30 years. Their APUs use significantly less energy than traditional GPUs for the same AI workloads, up to 98% less power consumption. I'm waiting to see how their new products are received, Gemini 1 and 2. I told you about XRPM, the 3% monthly payer pegged to XRP. If I see significant dips, I may add to that position if I have liquidity. SRFM, Surf Air Mobility, is down from where I started nibbling again. Palantir owns 20% of that microcap, and me and Barchart think it has a big year ahead. One penny stock Wall Street predicts will soar more than 450% in 2026. Barchart said that, not me, not investment advice or advisor. Penny stocks often fly under the radar due to their high volatility. Surf Air Mobility, which trades at roughly $2 per share, is a rapidly evolving regional air mobility company. After 7 consecutive quarters of meeting or exceeding guidance, and with an improved balance sheet and high potential AI software platform nearing commercialization, Wall Street believes this penny stock will evolve more quickly than initially expected. With Surf OS set to launch in 2026 and the company moving toward profitability, some Wall Street analysts predict this undervalued penny stock could skyrocket by as much as 458% next year. And ULTY is a weekly dividend payer I own. It's suspended as of Friday because they're doing a 10-for-1 reverse split. We'll see how that plays out. On the crypto side, my biggest bag remains XRP, and I bought some Telcoin, symbol TEL. Telcoin is special for its unique approach of bridging traditional telecommunications with decentralized finance to facilitate low-cost, mobile-first financial services. This model is designed to reach the world's unbanked and underbanked population, leveraging the widespread adoption of mobile phones. My son just downloaded their app, and I'll give you guys an update on how that thing is working out if you're interested. As the first U.S. chartered digital asset bank receiving final charter approval this month, Telcoin is uniquely positioned to issue regulated bank-backed stablecoins known as digital cash. The first of these is EUSD, a compliant bank-issued stablecoin. Guys, this company is now a top 100 crypto and trades at about a half a penny. I just thought it was an interesting project, not investment advice or advisor. Hey, I want to thank you for watching, and please remember to hit the like button after this slide if you enjoyed the presentation. Subscribe to the channel and set the alert so you're notified when I have new information to share. See you at the bell.